It's Tuesday, November 18th, and here's everything you may have missed in business and finance yesterday. All three major U.S. indices finished in the red. The Dow dropped 1.2%, the S&P 500 was down around 90 basis points, and the Nasdaq was down around 80 basis points. Notably, the S&P 500 broke below its 50-day moving average for the first time in 138 trading sessions. That's the second longest streak in market history. A lot of the weakness we saw yesterday came down to one thing, Nvidia angst, if you will. The AI King reports tomorrow after the bell, and investors are nervous. Nvidia fell about 2%, dragging almost all of tech down with it. Other sectors that led the decline were financials and energy. In terms of tech, investors continue to worry about high-tech valuations, how quickly AI chips are depreciating, capex spend, and large debt issuances from big tech. Those worries got louder yesterday when Amazon issued $15 billion in debt, its first such raise since 2021. We're also seeing higher demand for credit default swaps in the sector, basically insurance against tech blowing up. Private credit caught some heat yesterday after Blue Owl restricted withdrawals in one of its funds ahead of a merger. Their private credit vehicles helped finance Meta's huge Louisiana data center, so naturally that shook the AI-adjacent credit world too. We also had a big voice weigh in. Jeffrey Gundlach, who's called the Bond King on Wall Street, said private credit is shaping up to be the next financial crisis, comparing it to subprime mortgage packaging in 2006, which wasn't exactly a light comment. Crypto was ugly again yesterday. Bitcoin broke below $90,000 for the first time since April, now almost 30% off its peak from last month. The VIX, Wall Street's fear gauge, surged almost 13% yesterday, closing above 22, its highest level since mid-October. Meanwhile, the 10-year Treasury yield held about steady at 4.13, and the dollar ticked slightly higher. Rate cut expectations are still far lower. A month ago, markets were pricing in a 90% chance of a rate cut by year end. Today, that's closer to 40%, even after Fed Governor Waller hinted yesterday that he'd support a December cut because of softening labor trends. Some corporate highlights from yesterday. Amex was the worst performer in the Dow, sinking 4% as loan write-offs ticked up for both consumer and business cards. Alphabet was a rare bright spot, jumping 3% after Berkshire Hathaway disclosed a new stake. Alphabet's Google also rolled out new AI travel planning tools, which crushed competitors. Expedia fell almost 8%, and TripAdvisor and Booking were also down. Quantum computing popped 8.5% on impressive revenue growth. Dell and HP sank 8% and 7% after Morgan Stanley cut both to underweight. Robinhood and Coinbase fell sharply as crypto selling accelerated. Other big events this week, we have obviously Nvidia earnings tomorrow after the close, but we're also going to get Fed meeting minutes, non-farm payrolls, there's a G20 summit in South Africa, and Walmart will report earnings on Thursday, which will give us a little bit more info about how stretched the U.S. consumer really is.